Forget about the daily charts and the social media chatter for a moment. Right now, there's a geopolitical story unfolding that could have a much bigger impact on Bitcoin's fundamental structure than any ETF or halving event. It's a story about sanctions, secret state reserves, and what might be a $60 billion financial shockwave.
So let's just start with a really simple question, because it frames everything we're about to talk about. What would actually happen if nearly 3% of all the Bitcoin in existence were suddenly taken off the market? Locked away, maybe for years. Keep that thought in your head, because this isn't just a hypothetical.
All right, here's how we're going to break this down. First, we'll look at the geopolitical trigger that kicked this whole thing off. Then, we'll dive into the theory behind this massive $60 billion shadow reserve. From there, we'll get into the mechanics of what a supply shock like this really means. And finally, we'll walk through the 3 most likely scenarios for what happens to all that Bitcoin.
Okay, part 1. This story doesn't start on a trading desk. It starts in a courtroom. It's about a major geopolitical event that's happening right now.
So as Venezuelan President Nicolás Maduro faces some very serious charges in a New York federal court, all the headlines are focused on the politics, right? But for the crypto market, the real story, the one that matters, is happening completely out of sight. It's a structural story about a huge financial stake that could change the game.
And at the heart of it all is this one staggering number: $60 billion. That's the estimated value of a secret Bitcoin reserve that intelligence reports suggest Venezuela has been quietly building. A fortune that could now, theoretically, come under the control of the United States.
So the obvious question is, how on earth does a country under some of the tightest sanctions in the world build a reserve that massive? Well, let's get into part 2 and unpack how this hidden fortune was allegedly built.
The difference here is just wild. If you look at the official public data, Venezuela holds about 240 Bitcoin. It's almost nothing. But then you have intelligence reports, like a big one from Whale Hunt, suggesting the real number is over 600,000 Bitcoin. That's not a small discrepancy. We're talking about one of the biggest Bitcoin stashes on the planet.
And this massive hoard has a name. It's what's known as a shadow reserve. Now, this is a really key concept. This isn't just about a country saving up. This is a strategic weapon built completely off the books for one reason: to get around sanctions and operate totally outside the traditional US dollar system.
So how did they pull it off? Well, according to the reports, it was a multi-year, multi-step process. It seems to have started back around 2018, with physical gold from the country's mines being systematically traded for Bitcoin. Then, more recently, their state oil companies started demanding payments in Tether, or USDT. But here's the clever part. Tether can be frozen, so those USDT funds were reportedly washed into Bitcoin, an asset that no one can freeze or censor. And to top it all off, they allegedly seized the Bitcoin from all domestic mining operations. Put it all together, and you have a massive reserve whose private keys are now in jeopardy.
Now, if you look at Venezuela's official crypto policies, on the surface, they look chaotic. In 2024, they banned all private Bitcoin mining and seized a ton of hardware. At the exact same time, they killed their own failed government crypto, the Petro. But these moves only seem contradictory until you look at them through a different lens. What if it was all part of a deliberate strategy to crush all private competition and pull every digital asset in the country into one secret, state-controlled reserve? Suddenly, it all makes sense.
And let's just pause to appreciate the scale of this. If these intelligence reports are on the money, this one's shadow reserve represents almost 3% of all Bitcoin in circulation today. That is a huge position, putting them in the same league as the biggest corporate whales out there.
Okay, so this brings us to the real $1 million or $60 billion question for the market. What actually happens mechanically if 600,000 Bitcoin are seized by the US?
Now, your first thought might be a massive government sale, right? But analysts say the most likely outcome is something else entirely, something called a frozen float. And this is the most important concept to grasp. It means this gigantic pile of Bitcoin gets pulled out of the tradable supply, not for a few days, but for a very, very long time.
And why would it get frozen? Well, the reason is simple: lawsuits. Venezuela owes a mountain of debt to international creditors all over the world. Think big corporations and bondholders. Just like they've been fighting for years in court over Venezuela's Citgo oil assets, you can bet they would immediately file claims on that Bitcoin, tying it up in legal battles for maybe 5, 10 years, or even longer.
And to put that into context, look at this. If the assets are seized, this stash would instantly become the 4th largest known Bitcoin holding in the world. It would slot in right behind Satoshi, BlackRock, and MicroStrategy, and it would be almost double what the US government currently holds.
Now think about the sheer size of this.
Remember back in 2024 when the market got all nervous because Germany was selling off around 50,000 Bitcoin? Well, this potential seizure is 12 times bigger than that. The scale here is just on a completely different level.
Okay, so this brings us to our final section. Let's really break down the 3 most likely paths forward for these 600,000 Bitcoin and what each one would mean for the market.
Scenario 1, and by far the most probable, is what we've been talking about, the frozen asset. The Bitcoin gets seized, but then it immediately gets caught in that massive legal web of creditor lawsuits. The result for the market is simple but powerful. 3% of the circulating supply gets vacuumed up and locked away in a government account for the next decade.
Scenario 2, which is also seen as very likely, is the strategic reserve. In this case, the U.S. might just decide to keep the Bitcoin. Instead of letting creditors have it, they could hold it as a national strategic asset, essentially turning a criminal seizure into the foundation of America's own sovereign Bitcoin reserve. But notice, the end result for the market is exactly the same, a huge long-term supply lockup.
And then there's Scenario 3, the fire sale. This is where the Department of Justice would just try to sell it all off as quickly as possible. But honestly, analysts think this is extremely unlikely. Why? Because dumping that much Bitcoin would absolutely crash the market, destroying the value of the very asset they just went to all the trouble of seizing. It just doesn't make any sense.
So here's the bottom line. 2 of the 3 most likely paths, the frozen asset and the strategic reserve, lead to the exact same outcome from a market structure perspective. As one analyst noted, the event is seen as a net positive for long-term holders because it effectively pulls a massive amount of supply off the market for years to come.
And that leaves us with one final, pretty mind-bending question to think about. If a nation like Venezuela, under heavy sanctions and economic distress, could allegedly pull together a $60 billion Bitcoin reserve in secret, you have to wonder, how many other nation-states are doing the exact same thing right now? How many other hidden sovereign reserves are out there? The analysis for this explainer was compiled from several key sources, most notably the in-depth report from Whale Hunt, which was authored by Bradley Hope and Clara Privy, along with public data from Bitcoin treasuries.
And finally, of course, the important reminder that this is for informational purposes only. It is not financial advice. You should always conduct your own extensive research before making any investment decisions.